Today I'm going to give you an update on a lot of these gold mining companies that we follow, a lot of these that I own personally. We cover them in the newsletter as well. And of course I talk about them sometimes on this YouTube channel. I always tell you this channel is about your economic survival. One of the ways you might want to try to economically survive is by owning some physical gold and silver. And definitely look at getting some exposure into high quality gold mining companies. I believe that they're going to perform incredibly well going forward, and they're one of the best opportunities of any kind of investment that I see right now, in my opinion. Nothing in this video should be considered personalized trading advice for you. Here's a clip from the archives from July 12th. If you're looking to get into what will be the most unloved investment you ever buy. I always tell you that it's a good investment approach to just always invest in whatever's the most unloved at the time. What could be more unloved right now than precious metals? People forget what precious metals are for, what they're about, and they're going to be reminded in a big, big way. A lot of my personal investment dollars are aimed at or focused on high quality gold mining companies. But I've talked about a few of them on this YouTube channel a few times before, so I want to take a look back, just give you an update about where we are with all this stuff. The one that I'm telling you about the most lately has been Newmont Mining. And if you remember, I've been telling you about this consolidation period leading up to either a breakout or a breakdown. In this case, it played out exactly like we thought. Newmont Mining, what I said actually was exactly this. So keep in mind everything you see on screen, everything you hear in this part, it's from a month ago, and you can see how it played out exactly like I expected. Don't hang up, just stick with me for 1 second, because this applies, what I'm going to tell you here in this part, applies to any kind of investment, because we're talking about support and resistance levels, we're talking about breakouts, so just bear with me and think of whatever stock you want, but I'm talking in this example about gold mining companies. You're seeing the price of gold swing wildly, big moves up or down day to day now, and that's generally when you see a market top or bottom, you start to see the volatility of the underlying thing increasing. It's becoming more volatile. The moves are more significant in either direction, but they're just more significant. And I think in this case, it is indicating a market bottom for gold prices. And since I released that video to you, the price of gold has gone up about $150 per ounce. That was a month ago. But what's performing even better than that, as I explained in this video, is that the gold mining companies will perform even better on a percentage basis than the increase in the price of gold itself. Here's a clip from the archives from December 9th. After a long time of being unloved, gold is finally starting to wake up. And you're seeing this possibly caused by the rampant buying that China is doing in preparation for their new reserve world currency that's backed by gold. And now fast forward to today's date, you can see that the longer this consolidation period goes, the stronger it will break out to the upside or break down to the downside. Any consolidation period in any kind of investment will act exactly in that same way. And again, keep in mind that this next part is from a month ago, so keep that in mind when you're watching this next section. But I'll show you this chart of Newmont Mining. This was the support and resistance I was telling you about while Newmont Mining shares consolidated. And generally a stock that breaks out of a resistance level like that generally has a lot of upward momentum going forward. Okay, we're back. This is from January 21st. You can see it's a pretty good breakout for Newmont Mining, but let's take a look at a few others. Kinross Gold, not a breakout, just a really solid uptrend. I Am Gold. You can see that a lot of these miners are all acting in the same way. They're all trading in sympathy, mainly based on the strength in the underlying commodity that they extract. Here's Gold Resources Corporation. And of course the big fish, Barrick Gold. Here's another clip from July 12th. And as the dollar comes down, what is going to spike? Gold, oil prices, all precious metals, they'll spike in value. And I should probably say something about Victoria Gold. And by way of disclosure, my father knows the CEO of Victoria Gold on a personal level, and he holds shares in the company. So I told you guys that I was way too early on this one, but in my opinion, I believe it'll play out in a really lucrative fashion. But what is going on with gold prices. This is so surprising to me. I believe that gold's going to have its day. I imagine it's a matter of months, if not quarters, and if it's not quarters, then it's years. But that would surprise me, but I've been wrong up until this point. Gold right now is at about $17.25. Silver is at about just under $20. My disclosure is I own shares in Newmont Mining, IAMGOLD, Kinross, Barrick Gold, and we've talked about a few of these in the newsletter as well. And if you're ever wondering if I put my money where my mouth is, I told my daughter to buy some gold mining companies, told my father, I told my friends. I do it myself as well. I'm either wrong or early plenty of the time, but I'm always only telling you what I truly believe will come to pass. Which means you're going to see a lot of strength in gold, building and building going forward at a time when real estate's going to be coming down pretty good. But that's for another video. And it's just slow because it's waking up. And once it gets going, it'll go. And that's going to be very rewarding for anybody who's invested in gold mining stocks or anything related to the price of gold or silver. You don't have to worry about gold. Gold can worry about itself. It'll take care of itself. The lower the price of gold, the more demand and the more mine shutdowns, the more constraints on supply, the more demands on demand. It's a heavy topic always when we talk about this economic setup that we're in because there's so many negative headwinds right in our faces. The American economy is in such worse shape than anyone overseas is recognizing. And when everybody figures this out, so too will gold. And I'll say a little bit more about that in just a second. I just wanted to go back and mention the inventory glut is going to be deflationary. The declining home prices are going to be deflationary. Even fuel prices now are lower than they were a month ago. Fuel prices are starting to come down. That's deflationary. This channel is about your economic survival. That's what we talk about, things like precious metals and how to get out of a lot of the overly speculative, extremely highly valued investments and get into some of the stuff that's a little bit less understood, a little bit more unloved. That's a great way to invest, and it pays off in a big way, especially when the underlying thing that you're investing based on, which in this case is physical gold, when it starts doing well, the companies that mine for and extract and sell the metal will do even better than the gains that you see in the underlying commodity itself. So if gold goes up 50%, the gold mining companies are going to go up by multiples of their current share price, in my opinion.